All right, welcome to the very first episode of Monday Stock Hunt. Every Monday, we're going to take a look at what's happening in the market, separate the headlines from the fundamentals, and hunt for opportunities inside one of the biggest investment themes of our generation, which is artificial intelligence. Some weeks the market will be optimistic, other weeks fear will take over and there will be sell offs. But our job isn't to react emotionally. Our job is to understand why the market is moving and decide whether anything has actually changed. Because sometimes Wall Street is right, and sometimes Wall Street gives long term investors an opportunity. Today's episode is a perfect example. AI stocks are selling off. Nvidia, Broadcom, Marvell, many of these companies leading the AI revolution are trading lower. The question is Wall Street warning us about something that we're missing? Or is this simply another opportunity hidden behind a sea of red? So let's find out. So at first glance, today's market action looks concerning. Some of the biggest names in artificial intelligence are trading lower. And when investors see a sea of red, it's easy to assume that something must be wrong. But markets don't always move because the underlying businesses have changed. Sometimes they react to uncertainty. This week happens to be one of the biggest weeks of the summer for investors. Several of the world's largest technology companies are preparing to report earnings. We'll also hear from the Federal Reserve and investors looking for any clues about the path of interest rates. And on top of that, many AI stocks have had incredible runs over the past year. When valuations climb, it's common to see investors lock in profits ahead of major events. In other words, some of today's selling may have less to do with artificial intelligence itself and more to do with investors reducing risk before an important week. But here's where I think things get interesting. A falling stock price doesn't automatically mean the investment story has changed. Tomorrow's headlines may focus on red candlesticks. I'm more interested in something else. Have the fundamentals of the AI revolution actually changed? Because if the answer is no, today's sell off could look very different a few months from now. In the next chapter, that's exactly what we're going to investigate. One of the biggest mistakes investors make is assuming that a falling stock price automatically means the business is getting worse. And sometimes that's true, but many times the stock price changes long before the underlying business does. And that's why I like separating price from the fundamentals. Today, the market is telling us one story. Prices are falling. But what are the fundamentals telling us? Let's start with AI spending. Over the past year, the world's largest technology companies have committed hundreds of billions of dollars towards artificial intelligence infrastructure. That includes building new data centers and purchasing more GPUs, expanding networking capacity, and investing in the infrastructure needed to support the next generation of AI models. So far, none of those long term trends have changed. Companies aren't announcing that they're canceling AI projects. Hyperscalers aren't saying they've bought enough GPUs, and demand for AI compute hasn't suddenly disappeared overnight. Could those things change in the future? Absolutely. That's why we follow the fundamentals every week. But today, I don't believe the market has enough evidence to say the AI revolution has suddenly stopped or changed that much. Instead, we're seeing investors react to uncertainty ahead of one of the biggest weeks of earnings this quarter. And that brings us to the next question. If the long term AI story hasn't changed, what could change it this week? If today's market is reacting to uncertainty, this week's earnings could provide the answers investors are looking for. Several of the biggest companies in artificial intelligence are about to report results. Microsoft, Meta, Amazon, Apple. While each company has its own business, I'm listening for something very specific. Are they still spending aggressively on AI? Because that's what drives the entire AI factory. Every new data center needs servers. Those servers need GPUs, and the GPUs need memory. The memory needs advanced packaging, and the data needs fiber optics, networking, optics, power, cooling. Every part of the AI supply chain depends on those spending decisions. If management teams continue talking about expanding AI infrastructure, then today's sell off may simply become another bump in the much larger trend. But if we start hearing companies reduce AI investment, delay data center projects, or lower future expectations, that would deserve our attention. That's why I think this week is far more important than today's red candles. The headlines may be focused on stock prices. I'm focused on what company executives tell us about the future, because that's where long-term investment opportunities are usually found. So in the next chapter, we're going to take a step back and perform an AI factory health check to see whether the foundation of the AI revolution is still as strong as it was last week. Whenever the market becomes volatile, I like to take a step back and ask a much bigger question. How healthy is the AI factory today? Remember, stock prices move every second, and the AI factory moves much more slowly. So let's walk through it. Cloud providers continue building new AI infrastructure. GPU demand remains incredibly strong as companies race to deploy larger and more capable AI models. Networking companies are still expanding capacity because AI clusters require massive amounts of bandwidth just to keep thousands of GPUs communicating with one another. Memory demand continues to increase as each new generation of AI hardware requires more high bandwidth memory. Advanced packaging remains one of the industry's biggest bottlenecks, and companies throughout that supply chain continue investing to increase production. Power and cooling are still critical challenges as AI data centers consume more electricity than ever before. And finally, optical networking. Optical networking continues to expand because AI factories simply cannot operate without moving enormous amounts of data between the servers. So when I put all those pieces together, I don't see an AI factory that's slowing down. I see an industry that's still being built. That doesn't mean stock prices cannot fall. They absolutely can. But it's important to remember that a correction in stock prices and deterioration in business fundamentals are not always the same thing. Today, I think those are two very different stories. So the next logical question becomes, if the long-term story is still intact, which companies become the most interesting to watch? Now let's talk about the companies that I'm watching. Notice I didn't say the companies that I'm buying today. There's a difference. One of the biggest mistakes investors make is feeling like they need to act every time the market moves. Sometimes the best decision is simply to improve your watch list. Broadcom remains one of my favorite networking companies because nearly every AI factory depends on moving data efficiently between thousands of GPUs. Marvell continues benefiting from custom silicon, optical connectivity, and networking infrastructure that hyperscalers need to expand AI capacity. Nebius remains one of the more interesting AI cloud companies as demand for GPU compute continues to grow. Iron's another company I'm watching because it's building the power and infrastructure needed to support AI workloads. And Corning continues supplying one of the most overlooked parts of the AI factory, which is fiber. Without high-speed fiber connections, none of these AI systems can communicate effectively. Will all five companies outperform? Nobody knows. But these are exactly the type of businesses that I'll be paying attention to if the market weakens or if the weakness continues. The key is not trying to predict tomorrow's stock price. The key is understanding which companies could benefit if the AI build-out continues over the next several years. And in the next chapter, we're going to talk about something even more important. What would actually make me bearish on AI? Now, let me be clear. Just because today's sell-off may be an opportunity doesn't mean that I'm bullish no matter what happens. Every investment thesis has breaking points, and these are mine. The first warning sign would be AI capital spending. If Microsoft, Meta, Amazon, and the other hyperscalers begin reducing AI investments instead of expanding it, that would ripple through the entire AI factory. And the second warning sign would be a weaker GPU demand. Today, companies are still racing to secure AI compute. And if that demand begins to fade, customers start delaying or canceling orders, that'd be a meaningful shift. Third, I'd watch data center construction. One delayed project is not unusual, but if multiple hyperscalers begin postponing AI campuses, it could signal that the industry's expansion is slowing. Fourth, I'd pay very close attention to networking companies. Broadcom, Marvell, Arista, and Credo. These companies sit near the heart of the AI factory. If several of them begin lowering guidance at the same time, I'd want to understand why. And finally, cloud utilization. Building AI infrastructure is one thing. Keeping it busy is another. If GPU clusters begin sitting idle instead of running at high utilization, that would suggest demand is no longer keeping pace with supply. Notice something about all five warning signs. None of them have anything to do with today's stock prices. They have everything to do with underlying businesses. And that's the difference between investing and reacting. Markets can fall because investors get nervous. Businesses slow because the fundamentals change. Today, I see plenty of market volatility, and I don't yet see evidence that the AI factory itself is slowing down. So that brings us to the final question. Does today's sell-off represent an opportunity or a warning? Not a stock falling simply because investors are taking profits. Price declines can create fear, but for my long-term view to change, the fundamentals would need to change with them. Now we can finally answer the question from the title. Are AI stocks sold off because the opportunity is disappearing, or is this the opportunity that we've been waiting for? And my answer is potentially. But that doesn't mean every AI stock is automatically a buy. It doesn't mean today's prices are necessarily the bottom. Markets can continue falling even when the long-term thesis remains intact. Valuations still matter, expectations still matter, execution still matters. And some AI companies are priced for nearly perfect results. And when expectations are that high, even good earnings may not be enough. That's why I don't think the correct response is to chase every stock simply because it's down. Instead, I think the sell-off gives investors a chance to slow down, review the fundamentals, and decide which businesses they actually want to own. And if a company was attractive only because its stock price kept rising, then a pullback can feel terrifying. But if a company has strong revenue growth, a defensible position inside the AI factory, improving cash flow, and long-term demand behind its products, then lower prices can make the investment more interesting. So the verdict today is to pay attention and build the watch list and know the prices you would be comfortable paying and wait for earnings reports to provide more evidence. Today's sell-off might be an opportunity, but this week's results will tell us whether that opportunity is supported by the fundamentals or whether the market is warning us about something new. Today's video is also beginning the start of something new for the channel. This is the first episode of Monday Stock Hunt. Every Monday, we're going to look at what's happening in the market and ask what the latest news means for investors for AI. The goal isn't to react to every headline. The goal is to identify the developments that could actually change the investment story. And then on Wednesday, we're going to be completing the AI Factory Season 1. And over the course of the season, we've explored the companies building the cloud, advanced packaging, fiber, etc. And on Wednesday, we're going to bring all those companies together. Each company's winners will return. One company is going to be crowned the overall AI factory champion. And then on Friday, we're going to review the portfolio. And I'm considering starting a separate imaginary portfolio using the winners from the AI Factory Awards. The idea would be simple. Start with a fixed amount of money, give each AI Factory winner a place in the portfolio, and then track their performance against the broader market. And that would connect everything we're doing on this channel. Monday tells us what's happening now. Wednesday helps us understand which companies are building the future. And Friday shows us how those investment ideas are performing in the real world. 3 different shows, but one connected AI story. The stock market can change its mind in a single day, and the AI factory doesn't. Today's prices moved lower, but after looking at the evidence, I don't believe today's sell-off has changed the long-term story. Not yet. This week we'll hear directly from the company spending hundreds of billions of dollars building the future of artificial intelligence. And that's what matters. Not today's headlines, not today's fear. The people building the AI factory will tell us whether demand is still accelerating or if they continue investing. And today's red candles may simply become another chapter in a much larger story. And if they don't, we'll adjust because that's what investing is really about. Following the evidence, not the emotions. So today wasn't about predicting where the market goes tomorrow. It was about asking one simple question. Has anything actually changed? And based on what we know today, the answer is not yet. So thanks for watching the very first episode of Monday Stock Hunt. On Wednesday, we're going to wrap up the AI Factory Season 1 with the grand finale. Should be a great way to close the first season of AI Factory. Until then, we'll see you on the next one. Like and subscribe and check out the buymeacoffee.com membership page.